The S&P 500 and the Nasdaq 100, we're going to talk about exactly what happened here on the day and ultimately how we moved. Now let's break it down into the 15-minute chart to get started. And I want to show exactly where we are. Now I have a few of these levels deleted. I did do a live, and we are doing lives now on 10:30 Central every day, about 2 hours into market open, and then we go live every single day here on the channel, so check it out. Anyways, this was our overall supply zone, our 2 hour, right? So we can come in, we can see, we mentioned from yesterday's video, I said if we invalidate this, we break above this, which we did really in the pre-market, and then we really conquered it right at market open. What did we say in the video from yesterday? That we had to anticipate a touch or a push at least up into the range of 11.35 to 11.4. That's where we went to, and like I said, it happened with relative ease. If you can see, there's very little liquidity in this range. So as far as right now, what's happening, we pushed up to that range, pushed right back down to the bottom range, right? Very up, down, very quick, smooth on the 1 hour chart, very simple. What I will say, beginning of the day, bulls definitely had control as far as volume. It was 100% there. I'm going to show you a quick chart here on Bookmap. I'm just going to show you what we were looking at here, specifically on ES and the Nasdaq. Now, the Nasdaq on Bookmap is not my favorite to look at because it doesn't give you as deep of a visual. So we're going to go into ES really quick. Now, as we jump in here, let's give you an overall visual, 8:30 at market open, and then just going on from there, get a little bit so we can see. Basically, this is level 2 data, just visualized for you, just so you know. Now, at the beginning of the market, I made a comment regarding 39.25 being a pretty big level because there's a very big buyer there trying to hold you above that. And that level stayed there essentially all day. We'll get to that here in a second. And so basically you started pushing up. Now you had sellers at specific levels. You had 39.50, conquered it, went through, mounted, and just kept going over. Another big level, sellers at 39.60, broke through on ES, and just really just continued that massive run all day, going into that next level of supply until ultimately you almost get like a double top and start making higher or lower highs. Now, before we get into that, you did end up breaking down through that seller's major level down here, and then eventually you started kind of rolling over a bit. Now, that price action that we saw there, this was interesting. For basically today, I'm going to let everyone know right now, I didn't take anything. I'm not going to lie to you. I took nothing. Now, essentially here, I wanted a pullback. I wanted something, some type of entry signal at open. You get this open, you gap up a little bit over, at 8:30 above that level. I wanted at least a retest on 11.2, something. Didn't get it. Beggars can't be choosers. And honestly, after last week, after some of the mistakes, right, I'm trying to ease my way, take some really good wins to start it off. I don't want to force any plays. I don't want to just start YOLOing. I want to just take it easy, remember what got me to where we're at right now, and get back into it. And then we can start opening up the risk once we get a few wins under our belt once again. So that's how my structure works, right? Reacting type trades, and then overall expanding risk as we get wins under the belt, right? We want to play with the house's money, not with our own money. Ultimately, that has to be the goal here. Now, before we go into too much of what I expect tomorrow with the Powell speech happening tomorrow, let's ask and tell you to do two things. I have to ask you to consider liking and subscribing to the channel. Every single day I post videos for you so you can be prepared. I tell you whether it's good, whether it's bad, whether I'm losing, whether I'm winning. Go back to Friday. What happened? I told you all about my loser right here. I told you all about the mistakes that I think that I made going through the end of last week. We had some really good winners up into that point, but I went wrong in a few key areas. That's what I try to do here, is educate you and not just give you what's going to happen today or tomorrow, but give you the news, the fundamentals, what's happening with technical supply and demand, and then most of all, an unbiased standpoint as always. I recommend following on Twitter because I'm always posting videos on here as well. I'm able to post some shorter form content on Twitter now, and also we do the live stream so you get notified when that happens. And then obviously more and more charts. You can actually see SPY came into this level right here, got a little bit above it, and then got rejected. So all this information on Twitter, absolutely free. And then if you want to make that next step ever and try to get into Discord, try to get educated onto the mentorship, things like that, I'm going to tell you right now, I do post all my trades there as well, but lately, past week, it's been slow. A lot of stops being hunted out. That's been my overall structure. I'm not going to sell you anything that's not honest. That's what's going on there, just so you know. But the focus of Discord is always going to be education, just so you know. Let's get back to the video. Now, as we jump into this, there's a few things that I do want to talk about, a few things I want to cover. Now, basically, we had a few interesting standpoints. I'm going to go over to Twitter really quick. I didn't write all these out already. Sorry, I know, my own fault. I know. Bad content creator. I apologize. Get a lot of Fed speakers today, okay? You get a lot of Fed speakers. Now, there was some good and there was some bad said, and a lot of the bad was said once you came to this highs up here. Now, what they did say, and the most bearish thing you can say that was happening today, Fed Bostic rates will have to remain above 5% for an extended period of time well into 2024. So now it's not like a Q1 type thing. Maybe it's like mid 2024. And that's really what kind of pushed us here. But ultimately, I don't even think it was that bad. This is nothing new. They're not, I keep saying this, they're not telling us anything new as far as on the bad side. But they do keep trying to push this agenda that everything's looking really good. And as you look at what Bostic was saying, Fed George, all of them, they were all pretty bullish on the day. If you really look at what they were saying. One, what do we know right now? China, their market is really heating up and it's looking like they're going to be bouncing back. So I want to talk about China in maybe tomorrow's video, get some more information on that to share with you. But I want to say that right now, China's market is killing it and it looks like they're back. And they've also stopped going into some of their tax breaks when it comes to the lower class citizens as well. So they're really trying to encourage spending over there. Now, it's a communist countries, and I don't love trading a lot of Chinese stocks, but nonetheless, it does look good. Now, Fed Bostic, some of the good news. I consider the natural rate of unemployment to be as low as 3.6, 3.7. The recent slowing of wage growth is beneficial, and they went on to say that this was going well with demand. Now, I will say, if you've seen my videos, I think unemployment has to rise more. I just don't see inflation cooling if unemployment stays at basically historical lows. That doesn't make logical sense to me, but I'm not the Fed, luckily, so that's what's happening right now. As you go into the charts, though, I want to spend a little bit of time here. Going into ES, the ES's chart is a little bit more tricky than something like NQ. We're going to go to the 4-hour really quick. And I want to highlight, this was your overall supply zone, and then you pushed up to about the hourly supply zone you had about right here. But ultimately, this was where all my attention was, which you broke above and then broke right back down through. So that level has been invalidated. That level is gonzo. It's gone forever. If we look at any type of demand you have to put, it's going to be really low down here, guys. It's pretty far down. So I just don't think a demand test is in the works right now based on how we've been moving. Now, bad news comes out from Powell. If Powell doesn't say anything beneficial, can guarantee that demand will be tested in a hurry. But I do want to say, we saw the strength this morning with volume. And then the table kind of turned. Now, I want to bring up the volume indicator really quick so you can see. We're going to go to the 1 minute just to highlight some of the movement on the day, specifically from the bears midday. And I want to cover NQ because it's going to give you the best visual here. And when we look at this red zone, I want you to understand where you're at on this zone. This red zone is basically, I want to highlight where you're at. Let me go over. Okay, the red zone up here. This is a monster level, okay? I want to highlight again just so you can visualize and see where we're at. This red supply zone, it's right here, but also when we consider this was basically this a little bit underneath, but this was that swing lows that we were having basically all through mid-November and early December. Remember when we were stuck in this range for literally a month? That's where that was. So I want to highlight that this level is really big. We're going to need very bullish news. We're going to need a very dovish Powell coming out. We're going to need CPI to have a pretty decent print to start pushing back above that. I want to highlight that right now. So when we come into this, I want to highlight overall what's happening. And we come right to about the 15 minute. We're going to actually go to the 1 minute so we can visualize that volume. Zoom out a little bit. But I want to compare and contrast just what's happening here. So we see volume stagnate after around 10:30, right when London closes. Typical volume drops off a cliff and we're kind of stagnating. But as you get in here, look what's happening. You are making lower highs, but every time sellers try to push you, buyers come back and try to hold you back. So you kind of bounce and you bounce back up and just over and over and over. And then eventually, obviously going into the about 1 o'clock marker, about 2 hours until the end of the day, you start really dropping off. And then again, you have the bear flag and it continues down to that previous supply zone right there, right? And that's where we end the day. So going into tomorrow, everyone's opinion, I know the questions below are going to be, Tyler, are we bullish? Are we bearish? What do you think is going to happen? Now, today we had a pretty spot on overall what was happening with the NQ and overall ES. A few things I want to point out right now. If the market is really going to rebound, if we're really going to have a bottom, this is a few things that we are going to look for. One, Nasdaq is going to lead the market, okay? We're not going to have a bottom on the market, in my opinion, if tech isn't leading that bounce, at least initially. What do I mean? If we go back from 2021 to 2022, when we were in a quote unquote like perma bull, anyone can make money in the stock market type of market, what was happening? What was the common denominator? Tech led it. It was all led by tech. Tech made you the most money. It just performed, right? Now, coming into this year, what's been performing? The Dow has already been performing. We can look at Boeing, we can look at CAT. You know, these stocks, not on the 15-minute, you need to go like the 4-hour. These stocks are pushing 52-week highs continuously, over and over. CAT's at all-time highs. So you continue to do this. Those names, they're going to probably just continue to do well, not get hurt that bad. Tech is going to have to start leading us back. What's a big factor when we go back to, the rally that we had back here in not November? We're going to go back a little bit further. We'll blast the past back in July and June. What was happening back here? Nasdaq was leading this rally, okay? It was the moving factor here. It was bouncing us, right? So if we're really going to bounce, we're really going to try to form some sort of bottom, which I don't think a bottom is in, you need to see tech lead it. That's going to be the confirmation, in my opinion. Now, that's what we're going to be looking for. Today was a good sign of that. I'm going to tell you right now. If you look at what happened, you look at the overall movement in the market, I believe Nasdaq and Qs were leading. Okay, I'm not saying a bottom is in. That's not what I just said. I don't believe bottom's in. But we're going to need more days when we have upside like this. We need days where Nasdaq does the charging. We don't need to see days where yes, has some tech in it. Yes, I'm not going to say it doesn't. But we don't want to see CAT, Boeing, Deere, Home Depot. We don't want to see those names leading the market. You need to start seeing money flowing back into tech because that's going to be where you can really assume that you're getting a real and true bounce. Okay. Now, following into what's happening here, going into volume on the day, it's not surprising that we had a little bit of a retrace into the end of the day. It's not surprising whatsoever. Why? Because if we look at the calendar, what's happening tomorrow, and again, I did not mention this in the video yesterday. I had a note about it, and then someone in Discord sent me a message right as I posted the video, and I was like, oh, dude, I totally forgot. But if you look at yesterday's video, what's the first thing I do? And I know a lot of you guys, y'all like to just y'all just jump to conclusions faster than any girlfriend I've ever had in my life. I'm not going to lie to you. The first comment on this was pinned. Pal Speaks Tuesday. Totally missed this. Literally all you do is scroll down. Anyways, so I want to highlight that. You do have Pal speaking tomorrow, and it's going to be a real discussion. It's not just opening remarks. That will be impactful, to say the least. Okay, so I definitely think you were seeing a little bit of selling, a little bit of profit taking across the board when that started happening, and then you saw a little bit exaggerated to the downside near the very end of the day. Now, I am anticipating questions that are going to come on this video, and I want to have your questions answered promptly. I don't believe Powell is going to be that negative, personally. What I'm going to do really quick, I only usually go over this on the Sunday videos, but we're going to look at Microsoft Whiteboard, okay? Really quick, I have some notes on here just so y'all can see. Let's get to it. So basically, we've been talking about this for a while, and I excuse the writing. I'm doing this with my mouse and keyboard. But basically, the big points right now. Powell said back in November and beginning of December at the meeting, whenever the market went crazy, his concern was inflation data. This was his concern. Basically, if we look, and I'm just going to describe what you're seeing here if you haven't watched those videos, you were seeing interest rates go up, up, up with inflation, right? We had to keep raising those interest rates all year long, going up. Well, now you're seeing inflation start to drop based on the data. And this is basically November, December happening here, and then going into January, you have to expect more of a drop. Now, that's what we expect, right? And it's kind of happening. Now, what's going on here? Our PPI, PCE, CPI, and now our even demand indicators are all saying that they're dropping, this is good. We wanted this to happen. This is what Powell said he wanted to happen. And what is that all based on? It's all based on these rates, okay? So this is all written out from basically November, and going into December, we expected a 50 point. We got it. And then now we expect going into February to get another 25 point. Why do we expect that? We have to expect that because that's what's happening based on data, and this is happening based on the track that Jerome Powell basically said he wanted to happen, okay? And that's taking place. Now, the big question mark here was unemployment. Will that rise? Will that drop? Because even Jerome Powell said, we don't really have control if we can just force them to lay people off or make unemployment rise. We can raise rates, we can hold rates, but we can't make companies just fire people. We can't do it. And that was the big question. Now, the question here also was, would demand start to drop rapidly while unemployment started to rise? Fortunately, unemployment is holding up. So basically what they think and what they want to happen is to see demand drop, unemployment stay a little bit stagnant, because as he mentioned back in that presser, he was like, unemployment being, this low could be beneficial. It could hopefully hold the market up while we, embrace some pain, embrace some demand pain. But we have to be careful that we don't let demand start to fall too fast and then unemployment start to just pump up, because that could be beneficial, very not non-beneficial. And then we can start seeing stagflation and then possibly start to raise rates once more. And then inflation could possibly become entrenched. And they just don't want that to happen. But they also don't want to start cutting rates, which they said today. What's the bad news was they could possibly let those rates go into mid-2024. Okay, so with this rate plan, what we're looking at, just so you know, if they do a 25-point hike in February, you'd be sitting at roughly 4.75, I believe. I do believe. And then that gives them room if they need to over the rest of the year, if they start having, demand starts pumping back up and unemployment starts dropping, or think they need to start raising rates once again, they still have 25-point hikes they can have in their book. At least they get to 6 on the overall, interest rates, right? So that's what I want to highlight there. And so this is ultimately the path I think they're taking, is taking 0.25 and then possibly just going to 0 at the next one after that. But that's ahead of ourselves, so we don't talk about that now. But what we're seeing, though, as far as this plan, if you've been with me since I've been covering this, this is all happening right now. So again, what does that make me believe? I can't believe Powell's going to come out tomorrow and be a hawk, personally. Now, he could say there's some factors as far on unemployment that are concerning, because they should be concerning. He could say stuff around energy, and specifically the cost of food based on energy has gone up, because we've seen eggs that started to go back up, right? We've seen look at the food market. It has been going up. I've posted a few things on Twitter as well. But those are the concerning parts. However, I think he might underplay some of the victory as far as what's happening. That's what Boston was saying. We need to underplay that. But based on his last meeting, he came out pretty strong. Okay, so I have to expect somewhat of a similar Powell, because what's happening right now is very good, and our market is definitely outperforming Europe's. And on top of that, like I said, with China, is their market's kind of roaring back. So these are all really good things. And now their COVID situation, they're basically like, it's not a thing anymore. We're taking all the restrictions off. So that's good. That's good news. So going into tomorrow, I have to expect we get some good news, some good data from Powell, right? That's what I have to expect, a good reading from him, whatever he's gonna say on the market. Now, nonetheless, again, still liquid, just chilling right now. Very transparently clear. Now, I want to talk a little bit about what I'm expecting and trade setups that I'm liking. And this video is already going way too long, but we're going to go into this really quick. I'm looking at more deep in the money positions as far as call options. I want to be able to hold things. I want to be able to actually benefit from the possibility of us getting a pivot to the upside. What do I mean? So I always talk about, you don't need to rush into a position as far as, when you're pivoting, right? So when we pivoted back in June, you had a lot of opportunities to get back in. When you pivoted back here in March, you had, from basically March 14th all the way to April 1st of upside, right? Going back here in October, you had a double bottom here in November, and then you pop back up. You get plenty of opportunities, right? You don't have to, it's not one day make or break. You're going to have opportunities. You're going to have data in front of you to tell you when to get in, when to get out, right? So in my opinion, what I've been looking at is companies that I like and companies that I'm looking at that are close to bottom or at least slowly moving down. So what I'm looking at right now, I like a few. I like Google, number 1. I like AMD, number 2. I love chips. I think chips have very good, a very good outlook in the short and longer term. I love AMD, probably my favorite. I'm liking Amazon. I think they could still endure some pain. It's still obviously one of the weaker names in the market. However, you're in a descending wedge. I still love them. And then last up, I'm not gonna lie, I gotta throw Tesla's name out there, okay? Because these are all just very beat up stocks. Google's probably the most conservative because its downside is so minimal, in my opinion, in comparison to these others. Now, what am I looking to do here? I would like to grab at least 10% in the money. So if it's at $100, I'd like to grab like 90, possibly even 85. So 10 to 15% in the money calls, buy less contracts, 1 or 2, for at least 6 to 7 months out. That is my strategy. That is my goal right now. Why? because you can look at the premium on those and it's going to move very similar to stock, but it's almost like you're trading it on margin, if you will, without having the margin, because you're just going to be having the overall, the option contract, right? So that's what I'm looking to do personally for myself. I'll still look for day trades. I'll still have some other setups. Of course, Discord, I haven't abandoned anyone. I've been thinking about overall how I want to play this for myself and what's going to be the best strategy, for profitability, right? Because I don't want to have to just get out of a position if I get up a little bit. I'd rather have a large chunk in this and have risk clearly defined across the board on everything, right? That's just my overall strategy, and that's what I want to do here. Now, again, I think Amazon's one of my favorite names down here. I'm going to tell you right now. If Amazon can get back above 102, that's when you're looking extremely bullish. That's when it's like, okay, you're back, start loading it back up for your stock, in my opinion. You can start averaging in down here as well, but 102 is confirmation that you're bullish, most likely once again. Going into Google, it's really not anything like that for me on Google. I think you are clearly still in this like downtrend that you have going on here. It's still very clear. But I believe Google's strong. If you look at the option contracts, even the deep in the money ones, they don't move bad and they move very good to the upside. If, for instance, you grabbed right here, let's go back on the daily, and I recommend go to TOS, go look at these contracts for yourself. If you grabbed about 70s when you hit back when you mounted back above like 86, this key level here. So when you bopped up, it came back down. You would have bought some deep in the money contracts here. You'd be up over 100% when you went back to 100, right? And I just want to highlight, you have months on these contracts and they're deep in the money. So your risk is clearly defined. Your reward is also pretty clearly defined. You're risking about 10, 15% in order to make, 70, 80%. Now, again, this doesn't mean YOLO, means definitely manage your risk to reward, but I'm just trying to set myself up for the possibility that we're seeing a local bottom potentially. Again, I think there's some big issues on the horizon. There's a lot of things we have to be concerned about. But if I am wrong, that's where I want to have my money at. At least if we catch another pivot to the upside, I can maximize my profit potential from there. Again, I will be trading SPY and these other names, but that's been my primary focus. I think all these have room up. We've seen Tesla. Now they're probably about to start releasing some news on the Cybertruck. We saw some of that leak today, right? So a lot of these companies, I think they have stuff in the works. Earnings season, I'm kind of clouded going into this earnings season, but I still think we can have some really good upside if this week plays out as expected. And what do we expect? We expect Powell to be a little bit bullish tomorrow, right? I expect him to say, literally, this is what I wanted to happen, and it's happening, because there's nothing that he said back in that November speech, or early December, late November, right? That hasn't happened. Everything that he said he wanted to happen and the Fed could do, they've been doing right now. So that's what we have to be looking forward to right now. CPI. Based on demand, we have to expect CPI has been dropping. I mean, you have to. Now, I don't know if it's going to come out at the forecast of what they expected. However, what I will say is I have to assume CPI is dropping based on every other major piece of data that's been coming out. That's my opinion. I'll see you guys tomorrow. Have a good one, traders.